What is up, YouTube? It's Jack here for another episode of Yakkin' Bullets. I just want to get through all the bullshit of the world and try to shoot you like exactly what I think about different subjects. So here we go. I just drank an entire pre-workout, so I'm super amped up right now. And the topic is going to be 3 stock rules that you need to go by. Here it is. First thing, I just want to say that I'm not a professional money man. All my views and shit on stock market is my own personal opinion. These are not stock recommendations. This is just my opinion on how I trade and the things I do based on me. So this is not a recommendation to buy, sell, trade, anything. It's just my verbal opinion. That being said, here we go. I want you to remember first and foremost, okay, 50% of the stock market are computers. No matter what your MBA or business professor told you with his great wisdom of a PhD that he hasn't traded a stock in like 20 years, things do not trade the way they did when he was whatever he was doing. His PhD, he probably hasn't traded a stock. And he probably hasn't a real job. But anyways, moving right along, okay? So, all algorithms do, computers run off algorithms. Algorithms grab headlines from a newspaper, an article, an agency. Whenever news hits the wire in the market, an algorithm grabs it, it throws it through its formula, and it says buy or sell. That's all. That's it. That's why you see complete sell-offs happen in a matter of like milliseconds, because these Deadpools and Goldman Sachs and all their great computers are just firing off just like that, and they are buying or selling. That's why you'll see that huge move. This is why there's no rationality to the market in the short term. Short term. Computers, algorithms, and big money managers, hedge funds. I don't care what your business professor said. Fundamentals do not matter in the near term. Fact. Okay? You'll see these wild swings that mean absolutely, like you cannot even wrap your head around it because they're just going everywhere. Rule number 2, only like a handful of dudes in the entire stock market run the stock market, okay? Between the mutual funds, the hedge funds, and the huge pension funds, that's where your money comes from. You're talking billions and billions and trillions of dollars moving in one direction. They all got each other's phone number, all right? So follow the big money and you'll see what's happening. They run off of a 12-month window, okay? They're going to cycle in and cycle out within that window, okay? Because they got a window shop. They have to put stocks in their portfolio so at the end of the year they can explain to their big money dudes, yeah, I own Facebook, or yeah, I own this. That's why they do it. They want to be able to say, yeah, we did it. Not necessarily the reason why. And that's what moves the market in the short term, is these rotations from hedge funds, pension funds, and big mutual fund guys. All right? Think about that. Keep that in mind. ETFs, all right, they're your worst nightmare. They can short and move the market just like that. They don't have to buy and sell just Apple. They'll buy and sell the entire market. But that's my opinion. Third and most important rule of the market is average down and scale in. Average down and scale in. Never buy all at once. No matter how right you think you are, never buy all at once. Okay? You scale in. Say you got stock A you love. You want it at 90. First quarter position at 90. Wait for it to fall to 87. Next quarter position at 87. Wait for it to fall to 83. Next quarter position. And then somewhere around in there, you put your last quarter on. You average down, average down, average down, average down. You want your cost base to go as low as possible. Never buy all at once. Always reducing your cost basis, and never violate your cost basis, okay? Because if you violate your cost basis, on the average, you are going to lose, okay? Once you get your cost basis in, do not buy another share above that cost basis. The law of averages are going to say you are going to lose on that trade if you violate your cost basis. Because you are chasing up, and that's when you're chasing your tail, and you'll always lose. Because there will always be a down day, whether it's with China or whoever else out there that's selling off the market for no apparent reason, for no reason because of that stock, no reason of that stock's fault, that the market is selling that stock. You will usually get your price if you pick that price and you stick with your guns and you wait for it to hit that. It might be for a brief moment. It might be for 30 minutes in the morning or at lunch, but you will get that cost basis, or you will get that buy price. Okay, stick to your guns. Again, these are just my opinions. These are for entertainment purposes. These are not for you just to go out and buy whatever stock I said during this little spill. These are just ideas on how I trade and what I do. And this is not a recommendation to buy or sell security. So that being said, if you got any questions, shoot them to me. I will answer just about any question you send to me, and I will try to put it right here on this camera so everybody can hear what I'm answering. Check me out on Facebook at Yak and Bullets. And that's all I got to say on this issue. Yak and Bullets out.